Well, good afternoon, everyone, and welcome to our webinar on Withholding Basics. I'm Cindy Nellis. I'm the director here at the Penn West University Clearing Small Business Development Center, and we are glad you are here. Whether you're ready to hire your first employee, you already have employees, or you are looking to pay someone to perform services for your business, today's training will help you navigate withholding basics from W-2 income to 1099s. You will learn when you need to withhold from compensation, which income statements apply to different types of employees or contractors, how to file and pay withholding, as well as year-end reporting. In addition, this module will touch on withholding for retirement income and PA rules for different types of retirement withdrawals. We'd like to thank the Pennsylvania Department of Revenue for partnering with us to present today's webinar, along with our full lineup of our tax series. So you are seeing actually the last webinar of our 2024 Pennsylvania tax series and our lineup for our 2025 Pennsylvania tax series. And I'll be sending that flyer as a follow-up today. So before we get started, I will tell you that we will be sending out all the presentation slides that you see, as well as a recording of today's webinar. We have the participants muted and your video is disabled. So if you have a question for our presenter, please enter them in the Q&A. We have a team of experts with us from the Department of Revenue, and they always do a great job of answering questions as we go along today. If you have a question for me, your host, please enter that in the chat window. Before we get started, I'd like to give you a brief introduction about the Pennsylvania Small Business Development Center. We are a grant-funded program, and our mission is to help businesses start, grow, and succeed. We're here to provide you with education like today, but also we have great information and tools to help you, our business owners, make better business decisions. We do this primarily through our one-on-one business consulting services, but we also, again, do training. Our consulting services are provided at no cost and they're confidential. We meet our clients in person, virtually, and by phone. However, we do like to meet in person at least to get started. Our training seminars are offered on a variety of topics and target the needs of small businesses. And to us, a small business, and just in defining the size, is typically a business with less than 500 employees. So almost everyone out there. We also use our funding to provide access to database information that we purchase related to industry and market research and financial analysis and implementing marketing strategies. And we partner with many economic development organizations as well to help you, connect you, our business owners, with many more resources to help you start and grow your businesses. A little bit about our network. This is our website, paspdc.org. This is our statewide network. We are a network of 15 centers, all located at institutions of higher education. We are a part of the America's Small Business Development Center, a national network that enables individuals and businesses all over the United States to access our program services right in your neighborhood. Okay, so that's a little bit about us. Let's move on to this is our contact information. And again, you'll get these slides. So our website, my center's email, as well as my email address. So again, you'll get these slides in your, we always welcome any connection. There's no wrong door to connect with the SBDC. So now I'd like to introduce you to our speaker, Stephanie Schreck. Stephanie has over 20 years of experience in customer service. She currently works as a research analyst in the core division of the Customer Experience Center. She started her career as a phone representative with the Customer Experience Center back in 2019. And through the years, Stephanie has served in many different roles within the Bureau, all of which have allowed her to work directly with the customers of the Department of Revenue. So with that, Stephanie, I will stop sharing and I will turn it over to you.
Thank you, Sydney. And thank you to everyone joining us today to learn more about employer withholding basics. Again, my name is Stephanie Schreck, and I work as a research analyst in our core division here with the Customer Experience Center for the Department of Revenue. All right, so let's get started. We have added this module to our new business series to try to help business owners like yourself understand how to properly collect and remit withholding on behalf of your employees and/or contractors. Okay, so today we are going to cover a wide range of information relating to withholding tax and the nuances that go into that. We will start with some fundamental information about employer withholding and then move into the different types of withholding accounts we have here in Pennsylvania. Once you understand what you need to do as a business owner, we will then talk about how to register for a withholding account and also talk through filing and paying requirements. After all that, we will then cover some things you should know about record keeping. Most new business owners don't realize just how important it is to keep good books and records. But please understand that this is for your benefit. If you ever get audited, which by the way is a standard business practice, you want to be able to show that you have done what is necessary to remain in compliance with the state. And then we will wrap up today's presentation by reviewing some resources that are out there to help you understand, help you find answers, should you have any additional questions after today. So let's get into the fundamentals. So before we start, let's define a few key terms that you are going to hear throughout this presentation. The first term is employer. An employer is an individual or an organization in the government, private, nonprofit, or business sector that hires and pays people to perform work. This would actually include most of you. Employers have a responsibility to withhold certain taxes from the paycheck of those individuals on behalf of the federal, state, and local government. These taxes are called trust fund taxes. All right. The next term here is employee. An employee is someone that another person or company, otherwise known as an employer, hires to perform a duty. Employers compensate employees for their work to grow and maintain their business. Employees typically have a specified pay rate and a written or implemented employment contract with the party they work for. However, some hired workers are not legally classified as employees and have a separate tax classification. All right. Which then brings us to a non-employee. So a non-employee is a self-employed person or entity contracted to perform work or provide services to another entity as a non-employee. As a result, non-employees usually must pay their own Social Security and Medicare taxes. They also have to remit estimated income tax payments. The next term here is withholding. Obviously, this entire presentation is about withholding, but it is important to note that we are talking about the money that an employer deducts from an employee's gross compensation and then pays directly to the government. So then we have compensation. PA compensation includes wages, salaries, commissions, and every other item of receipt related to employment, whether received directly through an agent in cash, in property, or otherwise, unless specifically excluded. Employer withholding is due on all types of taxable compensation. It is not required on non-taxable compensation. A common item that may be excluded from compensation for a small business is an employee's personal use of employer-provided property or employer-provided services. Additionally, any damage, whether by suit or otherwise, for personal injuries or sickness and payments made under Workmen Compensation Acts, Occupational Disease Acts, or similar legislation for injuries received while working are not included in compensation. Next, we have benefits. Benefits are any form of perks or compensation that are provided to employees in addition to their base salary and wages. Some are required by law and others are optional. Employee benefit programs such as pensions, profit sharing, stock bonus plans, or simplified employee plans are established by employers to provide additional compensation to participating employees upon or after separating from service. The completion of a fixed period of participation, the lapse of a fixed number of years, or showing of financial hardship. Employee welfare benefit programs are established by employers to provide benefits to their employees or their beneficiaries, such as childcare facilities, life, accident, or health insurance coverage, legal services, medical benefits, supplemental unemployment compensation, tuition reductions, disability benefits, strike benefits, and dismissal pay. All right, so we're going to take a brief pause to see what you remember. Take a second to read the question and put your answer in the chat. All right, so our correct answer is D. PA compensation includes salary, wages, commissions, and every other item of receipt related to employment, whether received directly through an agent, in cash, in property, or otherwise, unless specifically excluded. So as employers, it's important to know what is considered employee compensation and what is not. Keep this in mind as we continue. All right. So non-cash benefits, which are reportable as compensation under the Internal Revenue Service rules, are generally taxable for Pennsylvania personal income tax purposes and are not subject to withholding. Payments made by the employer to help employees with additional medical or dental expenses are not covered by medical insurance is taxable. Payments made to workout facilities or gyms, life insurance payments, as long as they are not group life insurance, are taxable. So are non-job related educational assistance, pension plans, 401ks, and other retirement plans. So in general, payments made by employers for employee benefit, welfare benefit plans that provide medical, dental, or vision care for their employees are not considered taxable compensation for Pennsylvania purposes. Further, supplemental unemployment compensation benefits and most group term life insurance premium payments should not be included in compensation. The personal use of an employer's property, leased or owned, or a service provided by the employer is not considered taxable compensation. Non-taxable items include the personal use of a company car, accounting services, or childcare provided, not reimbursed by the employer. Withholding taxes vary by state and local tax jurisdictions. Most states operate like the federal government and have tax brackets, meaning the percentage of the tax taken depends on their income level. However, Pennsylvania is different and we have a flat tax rate of 3.07%, meaning regardless of how much you make, everyone is taxed at the same rate. The amount of tax withheld is a credit against your income taxes that an employee must pay during the year. For Pennsylvania income tax withholding purposes, there are 3 different types of withholding we are going to talk about today, all of which can be filed on MyPath. The most common is employer withholding. The next is other income withholding, and last is retirement withholding. The type of withholding account that you need varies depending on whether you hire employees or non-employees to do the work. Additionally, some miscellaneous sources of income may subject you to withholding, and retirement distributions will as well. However, if you are familiar with MyPath, you may know that there is an employer withholding account, an employer withholding annual reconciliation. There is an other income withholding accounts, and of course, an other income withholding annual reconciliation. And lastly, we have the retirement withholding account and then the retirement withholding annual reconciliation as well. Meaning you could ultimately have 6 accounts in MyPath. When you request access to a withholding account, it will automatically grant access for the reconciliation. An employer withholding account is necessary when you are issuing your employees W-2s. The next is the other withholding, which is used when you issue 1099 NECs. You will only create another income withholding account if you choose to withhold taxes for Pennsylvania on those 1099 NECs. And lastly is the retirement withholding account, and this is used when the employees are issued 1099-Rs. So if you are a business owner hiring or contracting one or more individuals to provide services, then you must determine whether the individuals providing the service are employees or non-employees before you will be able to decide what type of withholding account you will need. In determining whether the person providing the service is an employee or a non-employee, all information that provides evidence of the degree of control and independence must be considered. So the common law rules is the fact that provided evidence of the degree of control and independence falls into 3 categories. We have behavioral. So does the company control or have the right to control what the worker does and find and how the worker, does his or her job? Financial are the business aspects of the worker's job controlled by the payer. These include things like how worker is paid, whether expenses are reimbursed, and who provides tools and supplies. And then next we have the type of relationship. Are there written contracts or employees types benefits? This would be pension plans, insurance, vacation pay, etc. Will the relationship continue, and is the work performed a key aspect of the business? Businesses must weigh all these factors when determining whether a worker is an employee or a non-employee. Some factors may indicate that the worker is an employee, while other factors indicate the worker is an independent contractor or non-employee. There is no magic or set number of factors that makes the worker an employee or an independent contractor. No one factor stands alone in making this determination. Also, factors which are relevant to one situation may not be relevant in another. The keys are to look at the entire relationship and consider the extent of the right to direct and control the worker. Finally, document each of the factors used in coming up with determination. If it is still unclear whether a worker is an employee or an independent contractor, after reviewing the 3 categories of evidence, then Form SS-8, Determination of Worker Status for Purposes of Federal Employment Tax and Income Tax Withholding, can be filed with the IRS. The form may be filed by either the business or the worker. The IRS will review the facts and circumstances and officially determine the worker status. Be aware that it can take at least 6 months to get a determination. A business that continually hires the same types of workers to perform particular services may want to consider filing the Form SS-8. Additionally, you need to know if you have employees or non-employees so that you can determine what form to use for reporting compensation at the end of the year. If you have employees, you will need to issue a W-2 and file a duplicate with the Pennsylvania Department of Revenue. If you hire non-employees, you will need to issue a 1099 NEC. And if you pay via miscellaneous source income, you will need to issue the 1099 miscellaneous. In addition, your employee may receive a 1099-R if they took a distribution from retirement, but that will likely be issued from the financial institution that is administering their retirement or pension plan. It is important to note that these forms need to be filed in duplicate with the IRS and the Department of Revenue, regardless of whether there is actual withholding, so long as you have paid more than $600. So once you have determined that you have employees, you need to withhold income tax from their compensation using a W-2, thus requiring an employer withholding account. Pennsylvania law requires employers, like many of you, to withhold Pennsylvania personal income tax from employees' compensation in two common cases. When resident employees perform services within or outside of Pennsylvania, and when non-resident employees perform services within Pennsylvania. So in simpler terms, if you are a business located in Pennsylvania or conducting business in Pennsylvania, you should withhold income tax on all compensation paid to PA residents, but you are only required to withhold on PA sourced income for non-residents. Excuse me. So if the employee doing the work does not live in Pennsylvania, but the work is being performed in Pennsylvania, there is a withholding requirement. Whereas if the employee does not live in Pennsylvania and the work is not being performed in Pennsylvania, there is no withholding requirement. Once again, the Pennsylvania personal income tax rate is 3.07%. This means you must withhold 3.07% of the gross compensation that you are paying your employee. We do encourage you to deposit this into a separate bank account until you are ready to remit the payment to the department. The only exception to this is when an employee is a resident of Indiana, Maryland, New Jersey, Ohio, Virginia, or West Virginia. Those states are considered reciprocal states, meaning that if their employees live in one of these states, the employer will only withhold taxes for that state. So even though it may be deemed Pennsylvania sourced income, because the work is being performed in our state, we have agreed to not tax them based on their residency in one of the reciprocal states. In these cases, businesses are not required to withhold Pennsylvania income tax on the PA sourced income if the employer withholds to one of the mentioned states. Employees who live in these states must submit the REV 419 to you, their employer, to indicate that they live in a reciprocal state. You must keep the completed form in their payroll records for at least 4 years in case of a withholding audit. If a business mistakenly withheld Pennsylvania personal income tax for a resident of a reciprocal state, that employee will need to file a PA 40, a Pennsylvania personal income tax return, to request a refund. A great example of this would be if your company is located near the border of Pennsylvania and Ohio. If you hire an employee who lives in Ohio but commutes to Pennsylvania to work, and you do not have to withhold Pennsylvania taxes for your employee because Ohio is a reciprocal state, and you should instead withhold for Ohio. Right. So if you've determined that you are hiring independent contractors or non-employees to perform services and withhold their tax, you will be required to open another income withholding account. You will see on the slide that you are required to open another income withholding account when you hire non-employees that do not reside in Pennsylvania. to perform services over $5,000 for the year. Per the IRS rules, the 1099 NEC, non-employee compensation, must be filed for each person that is not an employee of the business to whom the business paid at least $600 during the year. However, Pennsylvania rules state that non-resident withholding doesn't kick in until $5,000 of income is paid to an individual or business. What is unique about the other income withholding is that it only applies to non-resident, non-employees to whom you pay over $5,000 annually. This means if you hire a resident contractor or a non-employee who lives in Pennsylvania and you do not have a withholding requirement, in these situations, you will still need to file the 1099 NEC to report the income you did pay, but you will not need to collect any withholding. Rather, the non-employee should be making estimated payments on their income. Another reason you may have to open another income withholding account is to report miscellaneous sources of income. Again, withholding is only required if you pay via miscellaneous sources of income to non-residents in the amount of $5,000 or more for the year. As we mentioned previously, miscellaneous sources of income are also reported on the 1099 miscellaneous. A business is required to file the form 1099 NEC and withhold PA personal income tax if all of the following 4 conditions are met. The non-employee does not live in Pennsylvania. The payment was made to an individual, estate, a trust, or discarded entity owned by an individual, estate, or trust. Payment for services was made in the conduct of your trade or business, and payments equal to more than $5,000 for the entire year. So on the other hand, PA withholding of personal income tax is optional if the payments do not total $5,000. The non-employee lives in Pennsylvania. Withholding is not required on residents. Payment was made to a partnership, a corporation, or a multi-member LLC. Those entities have their own non-resident withholding requirements, but we will not go into that at this time. And if the payment was for services not related to your business. Please keep in mind that the payments we are referring to here is anything that falls under compensation, class of income, or business class of income. We also mentioned miscellaneous income. Some examples of miscellaneous income can include royalties, rents, prizes or rewards, medical or healthcare payments, crop insurance proceeds, cash payments for fish that you can purchase from somebody engaged in the trade or business of catching fish. Generally, the cash paid from a notional principal contract to an individual, partnership, or estate, payments to an attorney, any fishing boat proceeds. So for Pennsylvania purposes, you are required to withhold Pennsylvania personal income tax on certain payments of PA sourced compensation, business income, and lease or rent payments made to a resident individual or entity. This requirement applies to payments that meet or exceed the $5,000 annually. Most often, small businesses would use the 1099 miscellaneous if they are paying rent to someone for their space. If the rent is more than $5,000 a year and the landlord does not reside in Pennsylvania, the business should withhold personal income tax at the rate of 3.07% from the payments. Please keep in mind that to qualify, you must be making rental payments to an individual, an estate, or a trust. If you are renting from something like a property management partnership, you do not have to withhold. As mentioned previously, partnerships, corporations, and multi-member LLCs have their own non-resident withholding requirements. But please be sure to follow the IRS's rules for issuing the 1099 miscellaneous. So finally, the last withholding account is retirement withholding. As a small business, you will likely not open a retirement withholding account, as you will probably not be the administrator of the actual retirement plan for your employees. However, for general information, the Form 1099-R must be filed for each person who made a designated distribution in excess of $10 or more. So this could be for profit sharing or retirement plans, any individual retirement arrangements, annuities, pension, insurance contracts, survivor income benefit plans, permanent and total disability payments under life insurance contracts, and then charitable gift annuities. All right, so we are going to take a brief pause again to see what you remember. Once again, please take a second to read the question and please put your answer in the chat. Okay. So the correct answer is B. The 1099 miscellaneous non-employee compensation must be filed for each person that is not an employee of your business if your business paid them at least $600 during the year according to the IRS. However, Pennsylvania rules state that non-resident withholding doesn't kick in until $5,000 of income is paid to the individual. Remember, the other income withholding only applies to non-resident, non-employees to whom you pay over $5,000 annually. All right, so once you have determined what type of withholding account you need, you will have to register for those taxes on, so let's talk about how to register for those accounts on MyPath. Registering for business accounts is going to be vary slightly depending on whether you are an existing entity in Pennsylvania or brand new entity in Pennsylvania. Brand new entities who do not have any existing tax accounts with the Pennsylvania Department of Revenue will complete the Pennsylvania online business registration from the homepage of MyPath. To get started, you will type in mypath.pa.gov and scroll down to the panel titled Registration. And from there, you will click the link that says Pennsylvania Online Business Tax Registration and run through a series of questions. The system is intuitive, and depending upon how you answer the questions will determine what questions you will be presented with. Once that is completed, you will immediately receive a confirmation number, which you will want to save for your records. Additionally, you can use that confirmation number to create your MyPath profile. All right. You can also check out, we do have Revenue 411 videos on creating primary user profiles. It is very important to mention that you will not be able to create a MyPath account for brand new entities until after the registration process is completed. So if you are an existing entity, saying that you currently have a sales tax account, and now you want to add an employer withholding account, you will need to create a MyPath profile, or if you already have one, you would just simply log into your profile. And under the More tab, you will enter into additional panels, and you will locate the panel, the Accounts panel, and select the hyperlink Register New Business Tax Accounts. This is very similar to the one on the homepage, but some of the information will be pre-populated for you since you already have existing accounts. Please keep in mind that most of the time sole practitioners will have what we call existing accounts because their personal income tax accounts are linked to their social security numbers. If you are attempting to register from the homepage and you are getting an error message, this is most likely the problem. Registering online established business accounts with the Pennsylvania Department of Revenue and as well as opens unemployment compensation accounts administered by the Pennsylvania Department of Labor and Industry. Although all filing and payments for unemployment compensation withholding must be done through Labor and Industry. So once you have completed the registration, you will get started with filing and paying your withholding accounts. Withholding returns are filed every quarter with the Pennsylvania Department of Revenue. Every business owner that's required to deduct and withhold tax must file a quarterly return of income tax withheld on or before the last day of April, July, October, and January for the prior 3-month period. In addition, these returns must be submitted electronically. Currently, there are 2 methods in which you can do this: online or using a third-party vendor. We do strongly encourage you to use our online MyPath portal to file and pay your withholding accounts. Not only are you able to file and pay for the current year, but you are also able to view previously filed returns, access notices that have been issued from both the new PATH system and our old eTide system. You can request statement of accounts, which are made available immediately, and you can also send messages directly to the department. Another very important feature is that you can grant permissions to others, like your bookkeeper, that also view information regarding your returns. You can access the MyPath portal at mypath.pa.gov or simply visit the revenue.pa.gov website and click on the icon that says MyPath. Please note that you must create a user profile to utilize this service. Again, if you do need assistance with creating a profile, please see our Revenue 411 video on creating a primary user profile. If you need help filing your withholding return, you can also watch a 411 video titled Filing a Quarterly W-3. Okay. Lastly, the department does have approved third-party vendors who will provide e-filing software for customers who do not wish to use MyPath. A list of these approved software vendors is available on the department's website. All right, so the filing frequency for withholding tax is always quarterly. The payment frequency may vary depending on the amount of withholding that you are collecting each quarter. When you initially register for a withholding account, your payment frequency will automatically be set as quarterly. Near the end of every year, the Department of Revenue reviews the average of the current year, first and second quarter withholding payments, as well as the prior third and fourth quarter withholding payments to determine if the filing frequency does need to be updated. All right, so if your total withholding is under $300 per quarter, you would have a quarterly payment frequency. So in this case, the taxes are due the last day of April, July, October, and January. If your total withholding is between $300 and $999 per quarter, you will have a monthly payment frequency. For these employers, the taxes are due on the 15th of each following month. If your total withholding is between $1,000 to $499.99 per quarter, you would have a semi-monthly payment filing frequency. For semi-monthly employers, the taxes are due within 3 banking days of the close of the semi-monthly period. Lastly, if your total withholding is $5,000 or greater per quarter, at least $20,000 per year, you would have a semi-weekly payment frequency, in which case the taxes are due on the Wednesday following the pay dates for employers whose pay days fall on a Wednesday, Thursday, or Friday, and on the Friday following the pay dates for employers whose pay days fall on Saturday, Sunday, Monday, or Tuesday. Now, I know that those are a lot of dates and amounts to remember. Thankfully, the department publishes a schedule every year, which is called the REV 1716. And this breaks down filing and payment due dates by filing frequency. Customers may request a payment frequency change if they desire. A change to a more frequent payment schedule must be requested 15 days prior to the beginning of any quarter. You may request a frequency change through the MyPath portal by logging into your profile and selecting the frequency change hyperlink, or you can submit a written request under the send a message feature. An employer may change to a less frequent payment schedule only at the beginning of a calendar year, so long as the amount required to be deducted and withheld for each quarter is reasonable, expected to be less than the criteria amount for each payment schedule. So similar to filing the returns, employers can remit their withholding payments one or two ways. Our recommended way is online via mypath.pa.gov or by using a third-party vendor. Important things to remember is the payment vouchers are only available via MyPath, and the use of another tax form could result in a non-filer notification and or the misapplication of the tax payment. Per regulation, taxpayers who are making payments of $1,000 or more must remit them through an electronic funds transfer, also known as an EFT payment. Failure to comply with the electronic funds transfer remittance requirement may result in an assessment of a penalty equal to 3% of the total tax due, but not to exceed $500. The payment may be imposed on all payments of $1,000 or more that is not presented to the Department of Revenue by an approved payment method. So if every quarter you send in a check for over $1,000, you are going to receive the EFT penalty for every quarter. If you need assistance with remitting your payments via MyPath, we do also have another Revenue 411 video titled Making Period Deposit Payments. In addition to remitting quarterly returns and payments, employers must also file at the end of the year an annual reconciliation, or the REV 1667. This annual reconciliation not only reconciles all 4 quarterly returns that are remitted, but also reconciles any W-2s or 1099s reported by the employer. You must do this for each withholding account that you have. We cannot stress enough the importance of filing the annual reconciliation. Every year, there are many new small businesses forget to file the REV 1667, which then flags their accounts for non-compliance. When filing a 1099 miscellaneous or a 1099 NEC, ensure that you only enter information for the amounts on which you withheld Pennsylvania state taxes. If no taxes were withheld, please leave those fields blank. You must also allow up to 48 hours for the W-3 deposit period payments or the income statement to automatically populate on your account. If the pre-populated figures do not match your records, you may manually adjust the return figures. or allow enough time for the payments and income statements to process. Again, this takes 48 hours. So in this case, you must manually adjust the return figures, or you may choose to wait until the payments and income statements have processed. This is normally an issue in the fourth quarter. Many people file the fourth quarter return, and then they try to file the annual reconciliation right away. In my path, you can do that, but the information doesn't automatically carry over for 48 hours, meaning if you don't wait the 48 hours, then you have to manually adjust those figures. This is the same for remitting income statements. If you upload the income statements less than 48 hours ago, you must manually adjust the return figures. If you uploaded the income statements more than 48 hours ago, the figures should be reflected in part 1. If the information is not displayed the way the customer anticipated, they should confirm that no error occurred upon submission. One common error that the department has seen is related to customers who upload income statements in December rather than waiting until after January 1st. In these situations, my path defaulted to the previous tax year if the customer did not manually make the adjustment. This could cause 2024 income statements to show up as 2023 income statements. The best way to check if this is what happened is to search submissions under the More tab, and then the customers will enter the confirmation number and they can see what tax year the income statements were uploaded to. Additionally, if the income statements were submitted via bulk upload, customers will want to ensure that the file upload did not fail for any reason. All right, so let's just quickly discuss some common errors. Bulk upload is a major part of this process, and we continue to see some common bulk uploading errors each year. The file must be submitted in CSV format. If you have entered all your information into a spreadsheet, please ensure that you're saving that file as a CSV before uploading. The system does not support Excel files or any other format. Formatting of columns A and C. The ID numbers listed in columns A and C should not include any dashes or spaces. Formatting of columns B and F. If this is the most common error, the values listed in columns B and F of your CSV file must be in a 3-digit format. If your Excel file is defaulting to a single digit, for example, changing 001 to or 002 to just 1 or 2, will default the entire bulk upload. You will want to change the formatting of those columns. To do this, you'll need to highlight the appropriate column and change the number format. The correct account number, in column C, the account number listed in column C should be an 8-digit withholding ID. This is not changed from what it was used in the previous system. The 4-digit tax year in column D should be listed as a 4 digits. A 2-digit tax year will not be accepted. Employees with multiple wage records. If an employee has multiple wage records, you must add them together for the submission. The combined figures should be reported in a single row for that employee. Figures reported in columns 19 and 20. The wage and income tax reported in columns 19 and 20 should be listed in numeric format, only including 2 decimal places. Do not report negative figures. The minimum value is 0.00. The maximum value is all 9.99. Record keeping. The same laws that impose tax also impose record keeping requirements. Records must be maintained for specific periods of time so the Department of Revenue may administer tax laws efficiently. The general rule is that you have to keep your records as long as necessary. Many times this means you must keep records supporting the information on a tax return until the period of limitations for that return has expired. The period of limitations is the amount of time the department has to assess additional tax and the amount of time you have to amend a return to claim a credit or refund. Periods of limitations for withholding tax assessments is 3 years, begins when a return is filed. If returns are filed before the due date, they are considered filed on the actual due date. For refunds, the period of limitations is based upon the date of the tax paid. To comply with regulatory requirements, an employer must maintain records for each and every employee and how much, if any, of the tax that was deducted or collected during the payroll period. The record must provide a breakdown for each of the following: amounts withheld greater than the required 3.07%, the amounts deducted pursuant of the 61 PA Code 113.72 for under collection of another withholding period, and amounts deducted in error. Remember that we follow many of the same reporting and documentation requirements as the IRS, so make sure you consult with their requirements. In addition, your payroll records must show that you withheld Pennsylvania personal income tax on all taxable compensation at the proper rate and that you remitted the withholdings to Pennsylvania. To show these things, you must have documentation showing the amounts and dates of all wage, annuity, pension payments made to the employees, the amount of tips reported to you by your employee, records of allocated tips, records of fringe benefits or expense reimbursements provided to your employees, dates and amounts of the tax you withheld from their pay, dates and amounts of your withholding tax deposits, copies of withholding returns you filed and confirmation numbers, standard payroll journal and the accurate account can be used to record this information and will help serve as a basis for completing the W-2 wage record report. As we discussed earlier, employees who are residents of a reciprocal state do not owe personal income tax to Pennsylvania on their wages, as their W-2 income is only taxable to the resident state. So again, if your employee lives in Indiana, Maryland, New Jersey, Ohio, Virginia, or West Virginia, please have them complete the REV 419 and retain for your records. Again, as a reminder, if you, the employer, accept the REV 419, you must withhold the reciprocal state tax. Otherwise, you must continue withholding Pennsylvania tax. 1099 recipients are slightly different in that you don't have to worry about any benefits or business expenses. Anytime there's taxable income, Pennsylvania taxable income for non-employees, it should be reported on a 1099. You will be required to submit copies of the 1099 NEC or miscellaneous forms showing the following: the recipient's name, last name, rents, royalties, other income, medical, healthcare, care payments, gross proceeds paid to an attorney, non-employee compensation, state tax withheld, state income, schedule type, and if any corrections were made. We stated in the last section that you are required to file quarterly employer withholding returns and then an annual reconciliation for your employer withholding accounts. Your payroll expense records will become the basis of your quarterly employer withholding returns, or your W-3s. Your records should demonstrate all the tax that were withheld at the proper rate and that they were remitted on time. You should keep copies of your W-3s returns, as they will help you file your REV 1667 annual reconciliation. It is important to note periodically the Department of Revenue does conduct desk reviews and audits in which they review the records of thousands of businesses for tax compliance. To ensure businesses have a correct understanding of their Pennsylvania tax exposure and that tax laws are administered in a fair and equitable manner. The reviewer or auditor may conduct a complete review. They may utilize test methods that allow for an examination of a representative portion of the taxpayer's business activities. However, when records are incomplete or inaccurate, the department will develop tax estimates based on other information sources. Other information includes other tax returns and government or industry data applicable to that business. The courts have upheld the department's right to use estimates in developing tax liabilities when reliable records are not provided as required. This is why it's extremely important to ensure you are keeping complete and accurate records at all times. So withholding tax is a very important tax for business owners to deal with. It is considered a trust fund tax, meaning that the employees are trusting the business to withhold and remit their taxes on their behalf. And the Commonwealth is entrusting you to make those remittances timely to the Department of Revenue. Let's discuss some resources that are available if you should have any questions or concerns. First is the REV 415, the Employer Withholding Information Guide. This guide contains all of the information that we reviewed here today. It covers withholding requirements, taxation on benefit programs, expenses, collecting and remitting your taxes, as well as overpayments and refunds. Guidance for payroll providers, as well as phone numbers for areas to contact depending on your questions or needs. This is available on the Department of Revenue's website as well. Next, we have the REV 580, which is our FAQ or frequently asked questions sheet for withholding. This contains commonly asked questions regarding employer withholding, detailed answers. This also includes parameters for paper W-2 submissions, phone numbers, and the website for our online customer service center, which we will go over shortly. Here we do have the REV 588, starting a business in Pennsylvania. This is a guide to Pennsylvania taxes. This is a fantastic resource that does touch on all the basics for new business owners. This guide includes information for sales tax as well as registration, employer withholding tax, and other items that go into owning and operating a compliant Pennsylvania business. The REV 1716 is the schedule put out each year that breaks down the filing and payment due dates, the filing frequency. The REV 1611 is the form used to calculate the interest on all taxes due after January 1st, 1982. All right. And the interest rates for any given year is established by the U.S. Treasury Secretary and is effective on January 1st of each year. So for example, for 2023, the rate is 7% annually or 0.000192% per day. So we do strongly encourage all of our customers to use our online customer service center. To do this, you can use the link listed on our screen, or you can get there directly from our website. All right, and then this is where we have thousands of answers to frequently asked questions. The responses are updated regularly to ensure that the information you are receiving is accurate and relevant. Now, if you are unable to find an answer to your question, you can also have the option to submit a question to the department. This feature allows users to submit either general taxability questions or more pointed questions, and it does come to a trained representative that specializes in the tax. All right, we do have the Customer Experience Center call center. Here you will be able to speak to our representatives skilled in whichever particular tax type you picked from the menu. Our regular business hours are Monday through Friday, 8 a.m. to 5 p.m. And then we do have our Revenue 411 videos. These videos were created to assist you with filing and paying your taxes. We have mentioned a few of these videos throughout the presentation today, but we do encourage you to visit the website to see what we do have out there. And quickly here, we're just going to take another brief pause. To take a second to read our last question, please put your answer into the chat. All right. So the correct answer today is C. The REV 415, the Employer Withholding Information Guide, contains all the information that we reviewed here today. All right. Thank you guys so much for your time. Have a great day.
Thanks, Stephanie. Thank you so much. As we conclude, I'm just kind of looking around to make sure I think we have all of the questions answered. So thank you to your team. I'm going to do a quick poll. Let me launch that. And then as everyone is having a chance to complete the poll, I just wanted to remind everybody that I will be sending out the slides after this. We'll also be sending out an evaluation form following today. The Small Business Development Center is looking for your feedback and looking for information on how you like training offered, as well as what kind of topics you want us to cover. And then finally, we hope that you plan to come back. I'll be sending our tax series for 2025, and I hope that that you plan to check back with us if you have not attended all 4 of our trainings in our series. We'd love to have you connect back and join us in 2025. Awesome. Okay. Well, I think that's all we have for today. I appreciate everyone being here. I don't see any other questions. So I'll just say, thank you to our team of experts from the Department of Revenue, Shirley and Jason and Stephanie. And thank you all for being with us. I hope you have a nice holiday as the year of 2024 wraps up. And we look forward to working with you as you get your businesses started and growing. All right. Thanks, everyone. Have a great day.
All right. Thank you. Happy holidays.